It's been years, maybe 2009, 10, since we've had anything like this. And there's an old adage in the meat business: you sell it or you smell it. This is an industry that can't really inventory product very well. There's a pipeline of animals that are kind of coming, whether we like it or not. And so small changes in export markets can have a pretty profound effect.
That's a very memorable, Tim. Sell it or you smell it. Is there an advantage, though, to the companies that don't necessarily sell fresh meat but process it in some form and maybe freeze it?
Sure. Yeah. If you're a consumer of meat, say a processed meat company that doesn't have a slaughter operation, that could be a positive for margins. We follow Post, for instance, which owns Bob Evans Farms, and as pork prices are soft, that will probably help their margins.
Tim, we've built a wall. It's called the Meat Glut, and on it we see Tyson Foods, Hormel, Post Holdings. They are all off roughly 1%, if not a little more, because of what's going on here. Is this an opportunity? Is this justified? What would you do with any of these stocks?
Well, I have a sell rating on Tyson with a $55 price target.
Ouch.
And we think this is a company that's clearly past its peak in margins. And if the export situation didn't do it, the cyclical factors of increased production will. So we're certainly not a buyer of Tyson. I am a buyer of Post, and it would be wrong to think of Post as a meat company, although they certainly do have some meat exposure. But their primary exposure would be to the egg business, where they're on grain-based contracts, and they can really benefit from a lower price environment. You'll see eggs used in quick service restaurant menus, because of lower prices on eggs. So
and that's different from what we're hearing from Cal-Maine. How are they different in terms of the eggs and what Cal-Maine said this morning on earnings?
Yeah, very different. So Post sells its products, which are primarily sold to the quick service restaurant industry, on grain-based contracts. So they're really working with a spread business, whereas, taking a position in corn and soybeans and then trying to see if they can earn a profit on the eggs. They're somewhat indifferent Post is indifferent to the price of eggs in many respects because they're going to just earn that margin.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.